I keep it real, I keep it real, I keep it real, just keep it real.
Hey there, thank you for joining me for today's conversation about how to be a competitive buyer in a highly competitive real estate market. The main reason that I'm making this video today is really for my current and future clients, because I find myself having this conversation over and over again with them about how they can be the best possible buyer in this market. So I figured I can go a little bit deeper, give a little bit more information on the whole picture, and then I can dive down deeply with each of those clients. So I'm hoping my clients take the time to watch this video. But at the same time, I want to share this information with a much broader audience because I think there's a lot to be learned. And I think a lot of people are maybe reluctant or nervous to dip their toes into the home buying market because it is so competitive. So if this information helps you take the steps to prepare to become a better buyer and to make the dream of home ownership a reality, then it's time well spent. So I hope you take the time and take this information and heed it to heart. So I do want to say that this is a pre-recorded video, so I won't be able to take any live questions and answer your questions in the moment. But I do want to make sure that you can reach out to me on any of my social media platforms, Facebook, Instagram, YouTube, phone number, phone calls, text message, or email. So any questions that you do have, jot your notes down. Make sure to follow up with me. I want to make sure I answer all of your questions to the best of my ability so that you feel comfortable with the steps that you're taking and moving forward in a home buying process. So let's get right into it. I'm going to share my screen here. We've got a presentation that should take hopefully no longer than 30 minutes. I can be a little bit long-winded, so my apologies for that. But hopefully the information is valuable to you. I think you will find it valuable. So what I'm calling this presentation is not just qualified, but competitive. The reason I say that is because a lot of buyers will get a pre-approval, pre-qualification letter from a lender and say, hey, I'm ready to buy a house. Not necessarily the case today because the market is so highly competitive. We need to figure out how to make you an above and beyond competitive buyer to make sure that when you find the house that you love, we can get your offer accepted. And those are some of the details that I'm going to cover today with you guys. So I want to cover a little bit on an agenda here so that you know what to expect from this presentation. First of all is my goal. My goal is to help you prepare for a competitive buyer's market, allowing you to achieve the home of your dreams. There's nothing more heartbreaking than finding the house that you want to make the home for you and your family, but you're unable to be the winning bid for that house. So the information I'm going to share here today is information that can help you be the best competitive buyer that you can be. So our agenda then is, who am I and why should you care what I have to say about anything? I'll give you a little bit of my background, a little bit of my experience and details about me so that hopefully you can understand that the information I have to share is something worth listening to and something valuable for you. Second of all, why are we here? What has led us to this current crazy real estate market and kind of some of the statistics behind that. And then lastly, the meat of the presentation is going to involve covering 13 different tactics and strategies that we can use to make you a more competitive buyer to try to get your offers accepted. So that's our agenda. Let's dive into it and start by telling you a little bit about who the heck Sam Hartman is and why anything I have to say means anything to you. So first and foremost, I've been born and raised in Northeast Indiana. I'm from Fort Wayne, Indiana, and I've been working with Coldwell Banker Real Estate Group since 2013. A few really great recognitions that I've been able to receive over the years, so I'm very proud of, is I was a Coldwell Banker 30 under 30 finalist back when I was, under 30 years old. I was named Business Weekly's 40 under 40 recipients. I've been voted Reader's Choice Best Real Estate Agent in Fort Wayne. I'm consistently present in the top 100 realtors in Allen County. And a little fun fact about me, I once hula hooped for 2 hours straight. Now, that last one sounds really impressive until I continue the story to tell you that my little sister actually hula hooped for over 5 hours to win the competition that we were doing. So in my family, I'm the best realtor, second best hula hooper, though. So congratulations, Grace. So that's a little bit about me. I don't say some of those things to brag or be boastful, but I do say them so that you understand that I am in this market every day working with buyers and sellers. I have my finger on the pulse of what's happening. And so I have anecdotal advice and evidence to share with you about what's happening in the real estate market. So I hope that sets the stage. I hope that gives you some security and some comfort in watching this video and knowing what I'm saying is truly applicable in today's world, in today's market. So why are we here? Why is the market like this, and what has led us to this point? So you can see this graph on the chart here in front of you, where it kind of shows what a buyer's market is and what a seller's market is. So back in 2008, when we had the great housing crash, it was certainly a buyer's market. Home prices severely dropped. There was a lot of foreclosures. It was a great time as a buyer to buy those things, but at the same time, a lot of people were in a lot of financial uncertainty, so a lot of people didn't have that ability to buy. So there was an extremely high inventory of homes available for sale back in 2008, all the way up to 2014, 15 or so. Right around 2014, 15, the market started to shift into a seller's market. And so that is the green zone there, where home supply is below 6 months supply of homes. So that's what we consider a seller's market. And that's why there's more buyers right now than there are houses to buy. Currently today, as we sit, Allen County has a 0.6 month supply of homes. That is wild. And that is one of the big indicators about why we are here today, why it is such a highly competitive market. So we know it's a seller's market. What do some of the numbers tell us? Well, even just from a year ago, nationwide, the average days on market was 43 days for a home to sell. And in 2021 so far, it's been 21 days on market. So a substantial 50% decrease there, big change on the days on market. How about how many offers a home is getting? On average, 2.3 offers last year. This year, almost 4 offers on every single home that's listed in the entire nation. These are national statistics here. So that means only one buyer is getting the house that they love. That means there's 3 buyers that are heartbroken, which is why we are diving into this information today to help you prepare to be that one buyer for that house that you love so much. And then we also have seen a great amount of appreciation in home values, even just over the last year. So that might scare you a little bit. You might say, well, why do I want to buy a home when home values are appreciating so much? Well, we continue to expect home value appreciations to continue well through this year into the next year. We really haven't been slowed down by the COVID-19 pandemic and things like that. So it's the best time to buy is 3 years ago. But if that's not an option for you, let's look and get started today, and where you can take advantage of that continued positive market growth and appreciation in the market. And then the last piece of the puzzle that has created such a high demand for all these homes is there's a lot of buyers in the market because interest rates are so low, historically low, below 3% in 2020 and starting 2021. So because of that low interest rate, houses and even though prices are appreciating and they're higher this year, your mortgage payment can still be more affordable because you're paying less a month towards the interest of the home. You're actually building more equity with every payment. And so that's a positive thing. And that's why so many buyers are jumping into the market and starting the process, and why we're getting so many multiple offer situations on good homes. So that sets the stage. Who I am, why we're here, and now let's dive into what we can do as buyers to be competitive. So where do we begin? Well, we begin with the Indiana Real Estate Purchase Agreement form. This form is 8 pages of terms and conditions that a buyer negotiates with a seller to come to terms to move forward with the purchase agreement and for the buyer to purchase the home. Now, in these 8 pages, there are tons of tactics and strategies and line items that can either add value to a seller or detract value to a seller. And so what we're going to look at is some of these key areas. We're going to look at 13 different areas that really affect a seller's bottom line and their ability to achieve what they want to achieve. So we certainly, as buyers, don't have to do every single one of these tactics, but every one can still be, a check mark in your corner to be to get you to be the accepted offer and the accepted bid. So you can see there, I've got a little bit of a list of these items that we're going to discuss. So let's dive into it. Let's start talking about the money. That seems to be pretty important to a seller. What they're going to make on the sale of the home, how much equity they're putting in their pocket at the end of the day. So the price is going to be obviously very important. It's one of the first items on the purchase agreement that we discuss. And so, like I said before, on average, listed homes are receiving 4 offers on them. So because of that competition, it's not surprising for a home to sell above the asking price for the home. I recently wrote an offer on a property that received 13 offers on it and sold for $30,000 above the asking price. So you better believe that the next home in that neighborhood that sells is going to look to that home and they're going to price it according to that home as well. So this is where the appreciation continues to grow and grow and grow. And on average, the list to sell price in our market has been 98.5%. So pretty dang close to all offers being for asking price. A lot of them go for above that asking price as well. And so we'll just have to look at what type of a home it is, what the competitive situation is like at that moment to decide where we need to be for price. The next part, the next opportunity to make your best offer based on price is what we call the escalation clause addendum. Now, an escalation clause allows you to escalate your offer to beat other offers. So it works a lot like eBay auto bidding. If you remember the days of eBay, I haven't used it in a long time, but in eBay auto bidding, you might say, I'd be willing to pay $200 for this product. So you put that in as your top dollar. And if someone overbids you, you automatically jump their bid until it reaches that $200. So let's say, we're looking at a house. Let's say the house is $200,000 and you say, I will pay up to $220,000 to be the winning offer, but up to that $220,000. So that caps you there. So basically what that says is another buyer comes in and writes an offer for $210,000. It automatically pushes your offer to be just above theirs to be the best in price. So that's what the escalation clause does. That's how it can kind of help a buyer hedge their bet to make their absolute strongest price offer, but maybe kind of protect you from overpaying. The only way you're going to go to the absolute top end of that offer, that escalation price, is if another offer actually pushes you that far. So that's where it kind of gives you an advantage to hedge your bet a little bit as a buyer to keep you from overpaying too much for the home, but to still make sure you make your best priced offer. The next thing, number 3, that kind of affects the dollars and cents is your earnest money. So earnest money is like a security deposit on your offer. So when a seller accepts an offer, a buyer puts earnest money down, and the more earnest money a buyer offers, the stronger that looks to a seller. It's more skin in the game. It's more at risk for you as a buyer to show that you're really, truly a serious buyer and that you really, truly want this house. So this money is still your money as the buyer. It still gets applied to your down payment and fees and everything like that once the closing comes. You're simply putting it down as a security deposit. And let's say there is something that happens where the transaction falls apart. There are a lot of contractual ways that a buyer can still retain and keep that earnest money if the contract actually gets canceled and we are no longer moving forward on purchasing the home. So there is some protection there for a buyer, but the more you can put down up front, the more serious it shows a seller that you are about their home. Next, I want to talk about financing. It is becoming more and more and more important as the market gets more and more competitive. So I want to start by talking about who you work with as a lender truly matters in this process. I can't tell you how many times I would get a buyer with a pre-approval letter from 1-800-mortgage or mortgage.com or spaceship mortgage. And to be honest, although those systems are trying to be helpful, they just are not helpful in such a highly competitive market, because if a seller sees that pre-approval from a buyer, here's what they know is that this lender is going to be difficult to communicate with. Their closing timelines often get extended, and so it keeps us from hitting the contracted closing date, which is a huge problem sometimes in these timely real estate transactions. So that's why you want to go with a local, trusted lender resource that is known for their speed and their communication, because a lender needs to be able to communicate with everyone about where we're at in the process to make sure we are tracking towards the contracted closing date. So that's one of the first things that's really important about financing. The next thing is, what type of financing are you qualified for? There's mainly three buckets in the financing world that people can qualify for. The first and best option is cash. Cash is king, and here's why. Cash does not require a lender to be involved, so there's no lender requirements for a buyer to meet those requirements, and there's no appraisal to be done on the property as well. And cash can close almost as quickly as possible. So the cash is there, it's sitting in a bank account, it's ready to be transferred to a seller to say, here's your money, I want your house, let's get this deal closed. So that's why cash is king. That's the most highly competitive financing option. What a great world to be in, to be able to buy houses in cash. A lot of us are not in those situations. So the next best financing option is a conventional loan. A conventional loan has lender requirements that a buyer's got to satisfy. The home must appraise for the value that the purchase agreement states, and the closing timeline is usually 30 to 45 days in this process. I do have lending partners that can do this even quicker, though. So it is, again, important to know who your lender is, who they work with, and what their timeline is like for closing their transactions. Conventional loan is the second best financing option in a competitive market. The third tier and kind of the bottom rung are government loans, government-backed loans like FHA, VA, USDA loans. Now, the reason these are kind of the bottom rung is, in a competitive market, these loans have a few more requirements that a loan must satisfy and a house must satisfy before the loan can close. So it just stacks up a couple extra dominoes for a buyer and seller to knock over to make sure that the contract still closes on time and in the way everyone agreed to. So the property has certain minimum condition standards outlined by the government that it must meet. Again, they have their own unique appraisal process that the home must qualify through. And then at the same time, some of the lender requirements for buyers to qualify for these loans can be a little lower than the standards for a conventional loan. So a seller might look at that and say, if this buyer is using these government loans, there's a chance that maybe their financing isn't quite as strong as a conventional loan or a cash offer. So that is how the financing world is affected in a multiple offer situation. Now, if you're currently qualified for one of these government loans, that's okay. There are certain price points where that's pretty typical, but it's also something that you can work with your lender to work towards that next stage, to work towards qualifying for a conventional loan to make you even stronger. So if that's the case, I would encourage that conversation with your lender to try to bolster your competitiveness and get you kind of to that next level and that next tier. So there's some other financing details and things that go into the financing part of the contract. And the first of those I want to talk about is our kind of our fifth tactic is how closing costs are involved. So a lot of lenders are going to tell you as a buyer that you can negotiate your closing costs to be included in the purchase price of a home. In a normal balanced market, I would agree with this. But right now, almost predominantly all buyers are paying their own closing costs as part of the purchase agreement. So what does that mean? Basically, you've got your down payment as a chunk of cost the day of closing, but the closing costs outlined here, some fees to acquire the loan, third-party fees, homeowner fees. These are additional fees that go into the closing process. So $3,000 to $4,000 is a pretty safe estimate on some of those. The higher priced home you're purchasing could have higher closing costs because of that as well. So this is kind of a tactic that you need to plan for on how much cash availability you have to put as a down payment and to put towards closing costs. So that kind of goes towards your current budgeting, how much you're saving, how much you already have saved to make sure that you have the ability to cover these costs and that we're not asking a seller to cover these costs for you. It's a big one. I know it hurts to have that extra chunk of fees, but it is a big one for winning offers to that their buyers are covering their own closing costs. Number 6, I want to talk about appraisal. And I want to talk about the appraisal process, what goes into it, and how an appraisal and what you can do with an appraisal as a buyer to, again, make your offer be more competitive to sweeten the pot for a seller. So an appraisal is required, is a required part of the transaction by a lender. So once you get an accepted offer, the lender is going to order the appraisal, and the appraisal must come back to prove the home's value is worth the purchase price that we agreed to. So it is not uncommon, though, with how quickly our market is appreciating in value, it is not uncommon for an appraisal to possibly fall short of what the purchase price we agreed to on the purchase agreement. So let's say we've got multiple offers. The house was listed for $200,000. You ended up offering $220,000 and they accepted your offer. So we went $20,000 over the asking price to get an accepted offer. So now the appraisal must come in and prove that the home is worth $220,000. So what happens if it doesn't prove that? What if the appraisal comes in and says the home's only worth $210,000? Well, now we're left with this gap, a $10,000 gap between what the appraisal says it's worth and what the buyer said they would be willing to pay for the property. So how is that handled? Well, to be a super competitive buyer in this market, buyers that have really strong cash savings and cash reserves can offer to bridge this gap for the seller. So they can say, we're going to bring an extra $10,000 to the closing to bridge this appraisal gap. And this is a really, really ding, 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 huge value add to a seller. This is what is kind of helping guarantee that the money that we're offering them is the money that they're going to get at the end of the day. Again, it's kind of a tough pill to swallow as a buyer, but the most competitive offers are offering this to sellers. And that is a big determinant of who is the winning offer and who's the losing offer. So it's a tough pill to swallow, this one, number 6, talking about the appraisal, but trust me on this one. If you have the ability, it could be the make or break difference in whether your offer is accepted or not. Let's talk about timing. We've talked a lot about the dollars and the cents. Clearly, dollars and cents is extremely important to a seller to know how much money they're going to be making on the sale of their home. But timing can also be extremely important because everyone's got unique timing needs when they're selling a home. Maybe they're relocating out of the city for a job. Maybe they're building a new house, or maybe they're buying another house in the city and they need to time those transactions up accordingly. So, the very first thing I want to talk about, number 7, is the closing date. Do you have flexibility for when you can close on a home? That goes a really long way if you can help meet the closing date needs of a seller. So maybe if you're renting an apartment, maybe you're on a month-to-month lease to make you more flexible with your closing timeline. Maybe if you own a current home, maybe you're able to get pre-approved for the next home without having to sell yours, so that you can be as flexible as possible. So this closing date can be extremely valuable to a seller to meet their needs there, so that they can make their transition into their next home a smooth one, as smooth as possible. It adds value. Number 8, I'm going to talk about the possession date. So the closing date is actually the day that everyone signs the documents and that you now become the owner of your new home. But something buyers are offering sellers as a value add to sweeten the pot and add value is maybe a few days of possession after the closing. So you've signed on the dotted line, you now own the home, but we're going to give the seller maybe somewhere from 3 days, give them a weekend, even up to a week of possession, so they can get moved out of the home. They can buy their next home within that week, and they can make a smooth transition. So that is a huge value add for sellers if you have the flexibility as a buyer to provide them a few days of possession after the closing. Lastly, on this timing standpoint, is number 9, contingencies. Do you have a house that you have to sell to be able to buy this house? In this current competitive market, I hate to say it, but it's almost a death sentence. It's extremely difficult to negotiate a contingency when a home is receiving multiple offers on it. So the things that I would encourage you to look into or discuss with me further, I'm actually going to make a whole nother video about contingencies and how home sellers can create maximum amount of flexibility for their next home purchase. I'm going to create a whole nother video for that, so stay tuned. But reach out to me if you have further questions on this. I don't want to cover too much because I'm going to cover more of that in the future. But a contingency can be an extremely negative check mark on your offer that can really almost bury it right away. So that's something that I think, if you're in that situation, let's have a further conversation about the tactics and strategies that I'm helping my sellers create maximum amount of flexibility. So those are kind of 7, 8, and 9: closing date, possession date, and contingencies. We want you to be a flexible buyer with timing that can add value to a seller. Next, let's talk about inspection. Inspection, especially for a first-time home buyer, is such a big and important part of the real estate process. And it's certainly something that I encourage and recommend all of my buyers to do. Inspections, depending on the size of the house, can cost anywhere from $300 to $600, and depending on how deeply other inspections involved that we do, other than a general inspection. But in the contract, you can reserve your right to do an inspection. Usually what you get is about a 2-week window where you can have any inspection done on the property to ensure that it's in a good, livable condition that you're willing to accept for your house. Now, there are a few ways that buyers in this super competitive market are doing the inspections to make their offer stronger. The first way that they're doing it is they're just waiving their right to inspection, which is a super scary proposition to make, but I am seeing buyers do this. I certainly don't recommend this, but if you have a certain comfort level with maybe your handyman abilities, maybe contractors in the family that would be able to help you with future problems that might arise in a home that you weren't aware of, then that might be a great situation where you could do this to make a strong offer. Now, another way that you can do this to make a stronger offer, but still have your right to do an inspection, is to offer to purchase the home as is. What the as is addendum states is that the buyer can still have an inspection on the property, but that the seller is not going to be required to make any repairs of defects that might be found during the inspection. So what this is telling the seller from our standpoint is, hey, listen, we want to have the home inspected. We aren't going to nitpick you on little items of condition or defects and things like that, but we want to make sure that there are no deal breakers in the home. We want to make sure that maybe there's not lead in the water. Maybe we want to make sure the foundation is good. The electrical and plumbing are good. There's no mold and asbestos and things like that that could be major danger hazards. So we're telling the seller, we're not going to nitpick you on things that we're going to ask you to do, but we still do want to have an inspection. If some of those dangers do arise and some of those defects do arise, the buyer still reserves their right within that inspection window to back out of the purchase agreement, to keep their earnest money, and all of those things that would normally be involved with an inspection period. So although I don't necessarily recommend waiving your right to inspection, it is the number one way regarding inspections to make your offer stand out. But I think the as-is addendum is a really great backup option that can still protect you as a buyer, but add value to the seller as well. All right, this is the last kind of 3 items here. These are the finer details, some of the little minutia and nuance of things that go into an offer. So number 11, I want to talk to you about inclusions and exclusions. Inclusions are what's going to be included with the home. The dishwasher, the microwave, the fridge, the appliances, those types of things that are negotiable and are technically need to be written into the contract to be included. We want to make sure we know what the seller is willing to leave and what they're not willing to leave. So if we can match those things up and match those expectations up of what the seller plans to be included with the home and what the seller plans to exclude with the home, then it's going to make sure that your offer is meeting their needs and going to make sure it's not a negative. It might not be something that's a huge positive to the seller, but it's not going to be something that detracts from your offer and is a negative to your offer. So, we just want to look at, are they including the fridge? Are they including the laundry units? Maybe not. So we want to make sure those things match on our purchase agreement with what the seller hopes to achieve with that section as well. Number 12 is a land survey. Now on the contract, the land survey, you can choose whether you have one or not have one. You can choose whether the buyer pays for it or the seller pays for it. So land surveys usually cost around $300 to $400 for a typical size neighborhood lot. And I would recommend doing one of these if you're going to maybe do a home addition, maybe add an outbuilding to the property, or if you're going to install a fence. This helps show the property lines. It puts it on a written report so that any contractors can use that information to make sure that you're only building things on your property and not encroaching on a neighbor's property. So if it's something that you're going to do in the future, you can get a land survey done at any time. So it's pretty frequent right now in my purchase agreements that I'm just waiving the land survey. We're not even having one done because you can always order one in the future at any point for that $300 to $400 at your expense. And so that's another way to kind of make sure you're not nickel and diming a seller, sweetening the pot for them there. And now lastly is the home warranty. A home warranty, again, on this part, you can choose to get a home warranty or not get a home warranty. You can ask the seller to pay for the home warranty, or you as the buyer can pay for the home warranty. Cost for these is around $600, and a home warranty covers things that homeowners insurance doesn't typically cover. So it covers things like your appliances, your furnace and AC, your water heater, the plumbing and electrical, things like that. So it can be a great value for a first-time home buyer, especially if you're nervous about the additional cost of home ownership, if things were to break or things like that. So it could be a good value to ask to pay for one of these. But to make your offer stronger, again, we don't want to nickel and dime the seller and ask them to pay for this item. So, like I said, it costs you about $600. It is like an insurance policy and is good for, I've seen 12 to 18 months on different kinds of policies. So it could be a worthwhile thing for you to look into and pursue as a buyer, but we should expect you to pay for that item so that we're not nickel and diming the seller. All right, guys. So those are the nuts and bolts of what goes into an offer. Those are 13 line item, tried and true ways that sellers are either looking at your offer as a positive or a negative. It's either a check in the pros column or a check in the cons column. So to review with the information that we talked about today, number one, the market is competitive. It is a seller's market, but as a buyer right now, you're also getting a wonderful, amazing interest rate on your loan. So that's why there's so many buyers. So although it's competitive, it is a worthwhile time to pursue purchasing a home. The second review item here is that preparation is key. Let's look at this checklist, these 13 items, and let's prepare for those items to make sure that we can meet as many of them as possible to sweeten the pot for a seller. And that's going to take preparation. It's going to take knowing your budget, knowing your finances, doing a good job of saving funds for down payment and closing costs, and even an appraisal commitment. It's going to be knowing your flexibility and your timeline so that we can provide value to a seller regarding the timing. And then it's going to be continuing to improve and work towards these items to become and keep growing towards becoming the best buyer that you can be. And the last thing that I want to touch on and cover with you guys is that a buyer's agent is 100% free to you. All right. So me as a real estate agent representing you as a buyer is free of charge. I work for you. I advise you. I consult with you to make this process smooth and as easy as possible. And here we are making you the best competitive buyer as possible so that we can get you the home that you love. So no matter what stage of this home buying, researching process that you're at, reach out to me and let's connect so that I can help guide you through this process. The average home buyer is thinking about buying a home for up to 6 months before they ever even contact a real estate agent. I want to help shorten that timeline for you. If you reach out to me today because you're thinking of buying a home in the next 6 months, 12 months, 24 months, it's going to make a smoother, more efficient process for you when you do get to that stage that you're ready to buy a home. So reach out to me now, because planning and strategizing is going to make a world of difference for you when that time comes. So just know that I'm here for you. I'm here to provide you the advice and guidance that you need in this market to help you be the best buyer that you can be and to make this home ownership dream a reality. So with that, guys, thank you again for listening in. If you do have questions, reach out to me on my social channels, via text or phone, or even my email. You can get to me any of those ways. I'm happy to communicate with you and answer any questions that you might have. Again, I'm Sam Hartman, keeping it real estate. Look forward to seeing you out there in the real estate market, guys.
Just keep it real.